Now speaking, Brett Everson, General Manager, Investor Relations. Good afternoon and thank you for joining us today. Microsoft reported strong fourth quarter results, with revenue of $43.1 billion, up 14% year-over-year. Operating income was $15.5 billion, up 24%, and net income was $13.9 billion, up 28%. Earnings per share was $1.95, up 32%. Revenue in Productivity and Business Processes was $14.3 billion, up 17%, driven by Office Commercial Products and Cloud Services. Intelligent Cloud revenue was $12.3 billion, up 20%, driven by Azure revenue growth of 59%. Personal Computing revenue was $16.6 billion, up 10%, driven by Windows OEM revenue growth of 11%. Microsoft also announced a $40 billion share repurchase program. The company's outlook for the next quarter is for revenue to be between $41.2 billion and $42.0 billion, with operating income between $13.7 billion and $14.1 billion. Microsoft also provided guidance for the full fiscal year 2021, expecting revenue to be between $175.0 billion and $179.0 billion, with operating income between $60.0 billion and $62.0 billion. Microsoft reported strong fourth quarter results, with revenue of $43.1 billion, up 14% year-over-year. Operating income was $15.5 billion, up 24%, and net income was $13.9 billion, up 28%. Earnings per share was $1.95, up 32%. Microsoft announced a $40 billion share repurchase program and provided guidance for the next quarter and full fiscal year 2021. Revenue is expected to be between $41.2 billion and $179.0 billion, with operating income between $13.7 billion and $62.0 billion. Productivity and Business Processes revenue was $14.3 billion, up 17%, driven by Office Commercial Products and Cloud Services. Intelligent Cloud revenue was $12.3 billion, up 20%, driven by Azure revenue growth of 59%. Personal Computing revenue was $16.6 billion, up 10%, driven by Windows OEM revenue growth of 11%. Now speaking, Satya Nadella, Chief Executive Officer. Thank you for joining us today. We had a solid close to our fiscal year with the Microsoft Cloud surpassing $110 billion in annual revenue, up 27% in constant currency. We remain focused on three key priorities: helping customers use the breadth and depth of Microsoft Cloud to get the most value on their spend, investing to lead in the new AI platform shift, and driving operating leverage. We are seeing increasing momentum with Azure Arc, which now has 18,000 customers, up 150% year-over-year. Azure AI is ushering in newborn in the cloud AI-first workloads with the best selection of frontier and open models. Our intelligent data platform brings together operational databases, analytics, and governance. We introduced Microsoft Fabric this quarter, which unifies compute storage and governance with a disruptive business model. Azure AI Studio is becoming the tool of choice for AI development in this new era. Microsoft 365 Premium offerings are providing differentiated security, compliance, voice, and analytics value. Teams Premium has already surpassed 600,000 seats. Windows 11 is rapidly becoming a powerful new canvas in this new era of AI. More than 1 million organizations now count on our comprehensive AI-powered solutions to protect their digital estate. LinkedIn's revenue surpassed $15 billion for the first time this fiscal year. Bing is the default search experience for OpenAI's ChatGPT. We announced our most ambitious lineup of games ever at our showcase last month. We remain focused on delivering value to our customers, partners, and shareholders. Now speaking, Amy Hood, Chief Financial Officer. We expect commercial bookings growth to be in line with revenue growth. In Productivity and Business Processes, we expect Office Commercial revenue growth to remain healthy, driven by continued strength in Office 365 commercial and transactional purchasing. We expect Office Consumer revenue growth to remain healthy, driven by continued momentum in Microsoft 365 subscriptions. We expect LinkedIn revenue growth to remain healthy, driven by growth in Talent Solutions, partially offset by a decline in Marketing Solutions due to the lower ad spend noted earlier. In Intelligent Cloud, we expect Server Products and Cloud Services revenue growth to remain healthy, driven by Azure and other cloud services, including AI services. We expect Enterprise Services revenue growth to remain healthy, driven by better-than-expected performance across enterprise support services and industry solutions. In More Personal Computing, we expect Windows OEM revenue growth to remain healthy, driven by 7 points of benefit from early back-to-school inventory builds, while the overall PC market is as expected. We expect Devices revenue growth to remain healthy, driven by Surface. We expect Windows commercial products and cloud services revenue growth to remain healthy, driven by the renewal strength noted earlier, even with the moderated growth of new business and standalone offerings. We expect search and news advertising revenue ex-TAC growth to remain healthy, driven by higher search volumes, share gains again this quarter for our Edge browser, and the benefit from the Xandr acquisition, partially offset by the impact from third-party partnerships. And in gaming, we expect revenue growth to remain healthy, driven by Xbox content and services, partially offset by a decline in Xbox hardware. We expect gross margin dollars to increase year over year, driven by sales mix shift to higher margin businesses. We expect operating expense growth to remain low as we prioritize our spend. And finally, we expect our tax rate to be around 19%. Good afternoon, everyone. This quarter, Microsoft reported revenue of $56.2 billion, up 8% and 10% in constant currency, and earnings per share of $2.69, up 21% and 23% in constant currency. Microsoft Cloud revenue was $30.3 billion, up 21% and 23% in constant currency, and gross margin percentage increased roughly 3 points year over year to 72%. Company gross margin dollars increased 11% and 13% in constant currency, and gross margin percentage increased to 70%. Operating income increased 18% and 21% in constant currency, and operating margins increased roughly 4 points year over year to 43%. In the Productivity and Business Processes segment, revenue was $18.3 billion, up 10% and 12% in constant currency, driven by Office Commercial, which grew 12% and 14% in constant currency. Office 365 Commercial revenue increased 15% and 17% in constant currency, and paid Office 365 Commercial seats grew 11% year over year. LinkedIn revenue increased 5% and 7% in constant currency. In the Intelligent Cloud segment, revenue was $24 billion, up 15% and 17% in constant currency, driven by Azure and other cloud services, which grew 26% and 27% in constant currency. Enterprise Mobility and Security installed base grew 11% to over 256 million seats. In the More Personal Computing segment, revenue was $13.9 billion, down 4% and 3% in constant currency, driven by Windows OEM, which decreased 12% year over year, and Devices, which decreased 20% and 18% in constant currency. Windows Commercial Products and Cloud Services revenue increased 2% and 3% in constant currency, and Search and News Advertising revenue ex-TAC increased 8%. Gaming revenue increased 1% and 2% in constant currency. Microsoft returned $9.7 billion to shareholders through share repurchases and dividends, bringing total cash returned to shareholders to over $38 billion for the full fiscal year. For FY24, Microsoft expects FX to increase full-year revenue growth by approximately 1 point with no impact to COGS or operating expense growth. The company expects commercial bookings growth to be in line with revenue growth, and operating margins to remain flat year over year. For the first quarter of FY24, Microsoft expects FX to increase total revenue and operating expense growth by approximately 1 point with no impact to COGS growth. Gross margin dollars are expected to increase year over year, driven by sales mix shift to higher margin businesses, and operating expense growth is expected to remain low. Morgan Stanley analyst Keith Weiss inquired, Satya, what is the pace with which customers can start using generative AI technology? Amy, what should investors expect in terms of gross margins for these solutions? Satya Nadella replied, thank you, Keith, for your question. We have 2 main points of discussion with customers. The easiest way to gain value from generative AI is to adopt solutions like GitHub Copilot, which can provide productivity leverage for software developers in any organization. Additionally, we have built a first-class tech stack, the Copilot Stack, and Azure AI tooling to help customers build their own Copilot applications quickly. Cloud and data in the cloud enable this diffusion cycle, allowing new cloud meters to be adopted faster. Amy Hood replied, in terms of gross margins, I expect them to transition over time as we did in the prior pilot transition. We have a shared platform that allows us to scale those gross margins faster than last time. We're accelerating CapEx spend in Q4 and Q1 to meet the demand curve and focus on the transition and growth in gross margins. We're aiming to deliver 1 point higher operating margins year over year in FY24, despite the headwind from the useful life change. Jefferies analyst Brent Thill inquired, Satya, when do you expect to reach peak optimization and see relief in the back half of the year? Is AI providing a tailwind? Satya Nadella replied, thanks for the question, Brent. We've seen an increase in cloud project starts during the pandemic, which has led to a backlog of optimization that we'll be catching up on in the next few quarters. We're seeing traditional projects, cloud migrations, data applications, and AI applications all start up. Once we've caught up on the backlog, we should return to a normal pace of new project starts and optimizations. Amy Hood replied, Brent, I think what we're seeing is that the normal optimization of our existing workloads is continuing, plus we're seeing new workloads start up. This is similar to what we saw last quarter. The change is that we're lapping a bit of catch-up from a year ago, and this will continue through the second half of the year. AllianceBernstein analyst Mark Merdler inquired, Amy, what drove the significant increase in revenue quarter-over-quarter and year-over-year? What components are driving this growth, such as physical data centers, servers, or AI-driven technology? Satya, what is the status of the Copilot development stack and how long does it take clients and partners to build Copilots? Amy Hood replied, CapEx in Q4 and Q1 has seen an acceleration due to increased demand for both normal Azure workloads and AI workloads. This is resulting in increased capacity for data centers, CPUs, GPUs, and networking equipment. We have seen a higher pace of capacity adds than we would normally expect for FY 23. Satya Nadella replied, our commercial cloud business is growing at a rate of 22% year-over-year, with CapEx growth at 23 to 24%. This translates into a large TAM opportunity for us. Our Copilot stack is available on Azure, and customers can use the low-code, no-code Power Virtual Agent tool to quickly build AI products. The underlying primitives for this are also available on Azure. Goldman Sachs analyst Kash Rangan inquired, what is the outlook for Azure growth rate in the broader Microsoft Cloud in the future quarters? Could we see acceleration due to the trends discussed? Satya Nadella replied, sure, Kash. Thanks for the question. The long-term total addressable market, TAM, for our commercial cloud is estimated to be 10% of global GDP. We view Copilot as the third pillar of our cloud services, alongside creation tools and communication/collaboration services. We plan to roll out Copilot in the first half of the next fiscal year and expect to see revenue signals from it in the second half. We believe that the cloud migration is still in its early innings, and AI will drive new workloads. We are a $111 billion commercial cloud that has grown in the 20s, but we anticipate sustained high growth. Amy Hood replied, the demand signals for our products remain strong. We've made a number of product announcements that have moved to preview and then to general availability, expanding our addressable market and reaching new budget pools. We're focused on executing against this opportunity, and revenue is an outcome of that. Our investments are driven by the demand signal, and that's why we're spending more time discussing them. UBS analyst Karl Kierstead inquired, Amy, could you provide us with some guardrails and color on M365 Copilot's cost intensity, gross margin pressure, and potential to pull along Azure? Amy Hood replied, thanks, Karl. We're excited by the customer reaction and requests we're getting for our new products. We announced pricing last week and will continue to work through the paid preview process to get feedback. We'll then announce the general availability date, sell the product and recognize revenue. This should be more H2 weighted and we've given sizing opportunities. It's about pacing and we still need to price and release Security Copilot and Dynamics workloads. AI solutions require data and AI services, so they pull both core Azure and AI Azure along with them. Satya Nadella replied, I can confirm that the platform effect of Copilots is evident in the extensibility of the applications built in teams. This is demonstrated when people build applications using Power Apps and SQL DB on Azure. Copilot plugins use Azure AI, Azure Meters, Azure Data Sources, and Azure Semantic Search, which creates a pull-through effect on the identity and security layers as well as the corpus services of Azure and M365. JP Morgan Chase & Company analyst Mark Murphy inquired, Satya, what evidence is there that Microsoft 365 Copilots, Security Copilot, and Sales Copilot will boost developer productivity by 40 to 50% or more, resulting in higher quality code? Satya Nadella replied, you're spot on with the metaphor of remodeling every room of the house with AI. We've seen great productivity gains with our GitHub Copilot and we're actively working on M365 Copilot, Sales Copilot, and Service Copilot. We believe these business processes can help reduce the burden and drudgery of work for CFOs, CIOs, and their people. We look forward to getting the data out to show the efficiency and productivity gains. Wolf Research analyst Alex Zukin inquired, can you provide insight into how AI workload adoption on Azure is driving incremental share gains, and how that could lead to a reacceleration of Azure consumption in the second half of the year? Satya Nadella replied, yes, we are seeing strong growth in Azure with new customers using it for AI workloads. We have seen customers who have used multiple clouds switch to Azure for their data and AI projects. This is resulting in increased market share and reducing customer acquisition costs. We are also seeing the benefits of our partnership with OpenAI, both in terms of model development and inference cost associated with revenue. We expect to see these positive impacts continue to show up in our quarterly results. Evercore IC analyst Kirk Materne inquired, Satya, could you explain how customers can best leverage AI services in relation to their data strategy? Do they need to address the data issue first before taking advantage of AI services? Satya Nadella replied, "Thank you for the question. Our data architecture and business model are well positioned to take advantage of AI reasoning engines. We have a Copilot design pattern that allows us to separate compute, storage, and governance, while still being able to interchange them. This is a disruptive business model that allows us to use Azure Data Lake, SQL Compute, Spark, and Azure AI/OpenAI in combination to get the most out of our data estate." Brett Everson replied, "Thank you, Kirk. That concludes our Q&A session for today. We appreciate everyone joining us and we look forward to speaking with you again soon."